advice do you have to homeowners?
Practicing that preparedness. Starting the conversation now is always going to be a benefit to any association out there.
And welcome to Recovery Report Live. It's a beautiful Friday here in South Florida at the Griffin studio. I'm very excited to be joined by an incredible guest today to talk about all kinds of things about real estate trends. But before we get there, I want to talk about important issues that are impacting our business community. As you all know, here on the Recovery Report Live segment, we talk about relevant business and insurance topics, providing actionable takeaways and valuable insights. We aim to update, educate, and inform you weekly. And I'm Dan Odess, your host here, president of Global Pro, where we manage the recovery of more than $1 billion in damages. That's a billion with a B, not an M. And how we do that is through education. And that's really what the focus is of today, is that we have a bit of misinformation out in the marketplace regarding these pandemic-related losses, and the business community is really reeling from this, and it's utterly confusing. You've had the opinions from South Africa, you had the opinion in London, all in favor of policyholders as it relates to these pandemic losses, telling insurance companies that they should pay for their income claims. Obviously, I'm summarizing, there's a lot of details to that, nuances, and really that's what we've been talking about from day one, is that there's a lot of details, there's a lot of nuances to each of these policies, and you need to be addressing these things on an individual basis and making sure that you have appropriately made your claim, you've mitigated your damages, that you presented your loss and damage to your insurance company, and in a way to be able to recover. And these two cases align with the opinions out of the Missouri courts here in the United States, back on our shores, in that these policies were intended to provide coverage. In fact, if you look at the lobbying efforts and how they got these forms approved, and you look a little bit through the lineage of those forms and how they became adopted, it's a bit misleading on behalf of the insurance industry to say that they never intended to pay these claims, because quite frankly, that's not the case. And quite frankly, they have been paying claims for these types of losses. But it certainly wasn't without fights, even where policies are completely silent on the issue of virus and physical loss or damage, or the use of the word of physical loss of or damage. You have differencing opinions, and unfortunately, I think a lot of the plaintiff attorneys were looking for that silver bullet that was going to get all these claims paid, and it just wasn't the case, as it is with many issues in insurance. A lot of these issues need to be addressed on their individual merits. Obviously, there's many policy forms that are the same, that are used in many policies that are similar, if not the exact same. And surely the opinions for one should have broadly applied to all of those, but it may not apply to the industry as a whole. And not to confuse everyone and provide any misleading information, we always say, reach out to us, let us know what your issues are. We've actually had very prominent national law firms reach out to us to talk to us about their strategies and the way in which they're addressing these things. And I was shocked to find out how little many of them knew about the actual claims process, how to actually adjust claims, how to present damages in a way in which claims get paid. And so we had to walk them through the typical adjusting practices to ensure that they understood how we typically make a claim and why these claims shouldn't be made any differently. And a lot of them have gone back, refiled things, rethought the process by which they've engaged in and their strategies into and supplemented their efforts. And we're seeing a lot of positive movement in that direction. Recently in Ohio, you had the courts ask the Supreme Court to render certain opinions. A little bit, again, certifying certain issues and questions relating to coverage. Again, there's a movement towards getting clarification rather than making broad, sweeping assumptions on things and issues. And what I find most shocking about some of the opinions from our courts that we have here in the United States is that where things are ambiguous, they're siding with the insurers. But the reality is that the opinions from each of the jurisdictions has been so different that there's only one conclusion can be drawn, which is that the issue of coverage and these pandemic claims largely falls on an ambiguous issue, meaning it's not clearly written into the policies and therefore is in favor of the insured, not the insurer. Unfortunately, in numerous courts, it's gone the other direction against the business community, and to the dismay of most that are looking at this objectively, like ourselves, It's certainly frustrating and head-scratching moment. You're sitting there going, oh my God, how did they get it so wrong? Again, nuanced issues. You have issues of civil authority, physical damage, physical loss, the conjunction of or, the use of the word of, microorganism, is a virus one or not, and the various different types of virus policies, virus endorsements rather. How about policies being endorsed and the renewals excluding specific viruses such as COVID-19? Well, if it wasn't in my prior policy, what does that say? I mean, it's a simple, stupid question. And it leads you to believe, I would say it would lead you to obviously believe that the prior policy was at least ambiguous on the issue, if not clearly not excluding such a coverage. I mean, come on, right? Makes a lot of sense. But unfortunately, we're left with a lot more questions right now than we do have answers. We continue to monitor the situation. We have resources on our website where we continuously update this stuff. We've been issuing memos to our clients to update on these cases and making sure that they have the most relevant and up-to-date information. We'll continue doing that. So we want to encourage you all to subscribe to our YouTube channel here. Make sure you follow us obviously like us on Facebook and follow us on Instagram and social media, because we're constantly be pushing out these updates to make sure that you all have the relevant information. It's really important that you know. And biggest part of our segment when we go live is about interviews. We want to bring on people that know more than me, more than you, that can give you advice and information about things such as trends and industry changes and things that are going on that is relevant to you as either a business owner or a community association. It's important that you all have the latest and greatest information that can help you make informed decisions about what is going on. So our next guest is the president of DLT Global, a team of experts in real estate acquisitions and planning. Tremendous amount of construction knowledge. I know this because he is someone I've worked closely with for a number of years now. He is certainly someone that I look to for information about things going on. And Hector Torres, DLT, Mr. President, welcome to the Recovery Report. Thanks for joining us today.
Boy, it's a pleasure to be here. I enjoy your show, and as much time as I can, I try to catch up with all the segments. So it's great to be here.
Well, with that said, I hope you're subscribed and then joining us every week for our live segments. We're going to be doing more and more of this, so super excited to have you on. Obviously, I know that you have your finger on the pulse of the real estate industry, specifically in South Florida area. But I do know that you hold certain prominent board positions that have a national, if not international, interest in things that are going on in the real estate in the construction industry. So I want to start off with some questions about the trends and where do you see them in something I always like to ask, obviously. Engineer by education, I got to ask the question, why? I've taught my 3-year-old going on 4, maybe she's going on 19, I don't know, I can't sometimes tell. She's got so many opinions already. But I always like to ask the question, why? So where do you see the trends and why are we seeing these trends?
So it's interesting. When we study real estate academically, we learn that real estate is about cycles. And I think I've heard many of your guests talk about those cycles. But it's never been identified what that means and how do you track that. So typically what we learn in cycles is that we look at the 10-year period prior over perhaps 30 years, and then we track those uniform items that give us indicators as to where we are in the cycle. And we apply that historical information to the current cycle, trying to identify where it began so that we can see where it ends. And then we know when to get in and when to get out of real estate and be profitable. Interesting event is that I used to carry a graphic board in my office to track it to make sure I can get out and when to get in. But what happened interestingly is that COVID-19 did the reset button for us. So there's no more tracking. We don't need to track it. It's here. It's now. The cycle has begun. And it's because the indicators here, right? The economics are the GDP is as low as the top of the GDP. The employment is very high. MBS's interest rates are low. Those are indicators that tell us that the cycle is here. We're at the beginning of the cycle, perhaps not quite, but we will be. So what we did at DLT Global is we saw that, we got excited back in April and said, hey, let's jump on this before and get ahead of it, so that in real estate, we're having our arms open when things come back to some kind of normalcy in trend, and we're the first sitting here with product that nobody else. So that trend actually was created by the virus, and the virus became an opportunity for real estate that is going to only grow in the next 2 to 3 years in our prediction. It'll last probably the same as any other cycle, which is usually 10 to 12 years. And now we can sit there and track it and say, if you're going to get into real estate, either buying, selling real estate, developing real estate, or dealing with any of the typical real estate transactions, you need to start now, and you need to start planning it now. By the time 2023 comes around, people will have had some traction and start creating velocity, which is where we want to be. So a very interesting team of events that me is very excited in real estate.
I mean, but it begs the question though, isn't it a bad economy? I mean, so why, like, you know, and I hear you talk about viruses and you're you know, and the whole pandemic issue and everything else. I mean, but you do hear these reports about how bad the economy is. You know, the rollout of the PPP and all these programs to help businesses stay in business. I mean, how does the perception of the economy play into this hot market, if you will?
Well, that's a very interesting question, and you have to deep dive into what has happened historically in these cycles when you have these bad economies, as you call them, right? I don't see them as bad economies. I see them as a heartbeat, right? If I was a doctor and I was looking at your health, I would want to see the peaks and the valleys of your heart, because I know that if your economy is growing like this or your heart's growing like that, you're going to blow up. If you have a straight line, you're dead. And if you're going down, that means that you're 6 years old under the ground. So you want to see those heartbeats, ups and downs in the economy in order to be able to predict what the next peak is going to be. So even though people, you're correct, see the economy now as bad, and it is bad. And there are people that aren't. The GDP isn't where it should be. The unemployment rate is not under control. The supply chains have been broken. Commodities are from good to bad, depending on who's the winner and who's the loser. We shouldn't look at the present to make determinations as when real estate is good to be invested. We should look always to the future. So when we see a bad economy, it's like a heartbeat. Right? We see the bottom of the. So there's only one way to go.
Right.
What? So now is the time to prepare during these times to take advantage of what's about to happen.
And how do you think the you know, historically low interest rates? Do you see? I mean, how do you see that playing a role in real estate investment in the market, the industry, as far as construction goes?
Well, obviously, when the CMBSs have low interest rates and lending in construction lending or real estate lending, it's a sign that they believe that the future is here as well, and they want to get in. Remember, CMBSs and banks and REITs and all the people out there in Wall Street, they make money lending money. Yep. So during that economy, they still got to lend money, right? I mean, it doesn't
keep
stop.
it moving.
Yeah, that's what they need, right? I mean, they got to lend it. So the fact that there's a bad economy means that they're going to have less deals that actually work, and then less deals overall, because most people pull back and say, "Oh, geez, I'm scared. It's a bad economy." You know, we didn't do that. In April, we actually got excited and we revved up the engines and we gave the gas pedal to the metal. And in reality, that is exactly what happened. What happened was we have a 300-unit complex currently right now breaking ground with a permit that we just obtained last month. And that's a result of working very hard during COVID and going to the markets that were lending money and saying, look, we have a project. We're ready to go. we're gonna be ready when at the end of the year, and your balance is going to go zero at the end of the year if you don't look to us to lend some money, and here it is. And so I'm not talking speculatively. I'm talking from experience that during the COVID crisis, we have a major 300-unit, 8-story building under construction that was the loan was acquired, capital loan was acquired and closed at the end of November of this year, which was 6 months after the COVID crisis.
Yeah.
So there's a proven fact in what we have done to what I'm saying, that now is the opportunity. The only negative part, right, because you got to look at the other side of the equation on the low interest rates, is that the leverages are going to be lower as well. So where perhaps you paid a little bit more and you had a 75-80% loan to cost, your rates going to be lower, but now they're going to require maybe 60 to 65% loan to cost, which means you have a larger portion of equity that needs to be raised in the capital stack.
Yep. Yeah. So, you know, we have a real estate project that we're real hot on in the Alapata area, and I know I was looking to redevelop, and we held back on it a bit, and we've been talking with a number of banks about funding options, and it's amazing how aggressive they are on those things, and a large part, and from a developer such as ourselves, it's exciting to see the opportunity and the cost of that carry, the cash that we would otherwise need to do the project, and the availability of it, the access to it. Let me say it that way. It's remarkable, and it's fantastic, especially in what some people are calling a bad economy. It's certainly, I think a lot of people misunderstand it as it relates to the real estate's ups and downs and the correlation between the two. Certainly, they all intertwine and interplay with each other in some way, but banks are definitely very aggressive right now. There's opportunity out there. So if you are interested in getting into that industry, or you're in it and you're investing and doing these things, it's just really, what I've seen is just banging on as many doors as you possibly can of the banks and talking. And it's amazing how actually one bank is introducing you to another bank that they know is actually lending for that type of product, because some are, heavy in industrial, or some are in residential, and you learn all these things by, asking questions and going, having these virtual meetings as we've been having, about where the interest is. But the irony, though, the situation when it comes to real estate is that there has been a tremendous uptick in price for some of this real estate. Do you still think there's a lot of opportunity out there, given how much attention has been given to real estate and acquisitions and buying? We see the price in real estate, obviously creeping up. What once was a great deal is now like an okay deal, because there's a lot of competition in the marketplace trying to buy and acquire. Where do you see the opportunity? Where and what sector do you think is most interesting to you?
Well, the answer to that question is going to come from the appetite that the bankers have to lend money. You're not going to be very successful currently trying to buy an office building or trying to buy a hotel as an asset class, right? You're going to have a very difficult time, if any, to be able to get that financed. But when it comes to industrial and multifamily, you're going to see a large appetite for that, because as I stated before, you can't look at real estate as a current commodity. If it was traded, it would be traded as a futures, because you have to look and be a visionary to be able to invest in real estate and see the future of it. So when you ask the question about where the opportunities are, you have to look to the future. What's the future? The future is you're having a huge integration within the United States to different areas. People are getting out of the urban environment and more into the middle ground between suburbia and urban environment, more of an open space area. And that's a mental decision because of what happened with COVID and things we have to deal with on a daily basis with social distancing and other CDC requirements. So it's easy to predict that there's going to be more need for multifamily, which is where you're going to see a lot of the banks lending money. I'm industrial because you have a distribution chain that's being changed as well, of which we probably have the best example on Amazon, how they position themselves to take over the U.S. Post Office. I mean, they're in every household in every part of the country. So when you look at that as a visionary example of what is happening in real estate, you see two opportunities. The asset classes are already there for us, which is more of the multifamily. But interesting enough, multifamily in a environment where mixed use multifamily. So for example, the project that we designed during COVID, we stopped in April and redesigned it to meet COVID standards with a mastermind about the people that we asked, okay, what would you want if you this COVID-19 influenced real estate for the next 3 years? Where would you want to live? Three things came into play, which we actually have put into our project, which is located in Dania Beach, across the street from Dania Point Retail Center, a pinnacle project, which is somewhere around 2 million square feet of all kinds of outlets and outdoor mall. Directly across the street, it's a no-brainer that you cross the street and you have the best amenities in the world, 2 million square feet, everything from a shopping market for your everyday goods to restaurants and cafes, and what a great amenity. So what's the amenity then that should be multifamily as opposed to what has been before? Three things stuck out. One is air quality. Second was noise quality. Third was water quality. And the overall experience in the building where people feel comfortable having touchless elevators, having touchless doors, having locks that are open from an app on your phone. They seem pretty minor, but they are absolutely cutting edge in how we have to look at real estate and incorporate new nuances, intrinsic properties into the DNA of the architect. It can't be just traditional multifamily. The other part of the piece was that we got rid of more stuff. And on the bottom floor, we have a bigger gym and an outdoor indoor gym, so that there's air flow during your time of doing exercise. We took the clubhouse and cut it down, and half of it has cubicles where if you're at your house with your 3-year-old, you want to be a 19-year-old, right, trying to sell. Anytime your lawyer wife is trying to law, right, you're trying to do your work. It's a little bit compromising. Right? So one of the greatest amenity I believe we created is not just the noise, air, and water quality sterilizations, but also having the area downstairs at small cubicles where you could do exactly what we're doing now, which is go live online, visit with somebody else on Zoom, and you have some privacy that you share an area that's more like an executive office space where you don't have to go to the main office. So that's the trend that we have to pay attention to and start to incorporate into the way we look at real estate in the future, whether it's a car, a hotel, or an office building, and converting it into multifamily. You have to look at those items as the new way of providing amenities to the experience of the habitat.
And that's why we have Hector Torres on today, to bestow that information on us, to provide us some guidance. As you can tell, Hector is a savant when it comes to these things. He has a tremendous amount of experience, both on the real estate investment side as well as construction, and the combination of those two things. I mean, you could hear it right here. I'm really excited to have you on today, Hector, to talk about all these things. I wanted to get into so much other stuff, but we're about out of time, so don't want to drag it on too much. I mean, to go back and break down every bit of what you said, there was so many questions that I had that I was just starting to think about. But one last thing I want to touch on, which is not only do you have experience in dealing with construction and obviously the real estate investments, you do quite a bit of expert work on insurance. Are you seeing, with having your foot in that industry a bit with the expert work you're doing, primarily doing cost valuations, estimating, and project planning, are you seeing any trends that insurance companies are missing, or policyholder advocates are missing in their valuations of these damages?
Oh yes, it's getting quite interesting in the insurance market, no question about it. Whether it's purchasing insurance, which I just did quite a bit of in my project, or handling expert witness cases in litigation with insurance companies. Yes, so I started in a business when I came to Miami for Hurricane Andrew and restoring, I would say, 433 different claims. And it was something that is very interesting in the relationship that I created between my construction knowledge, development knowledge, and the relationship of that to a residual analysis when it comes to a thing with real estate. So there's always been, in my experience, in Hurricane Andrew to now, when I've been doing these expert cases, there's always been a disconnect between the reality of what needs to be done on a scope of work, indirect, and the cost of that, what the insurance company believes that cost is, and the way that the methodology that you come up with that valuation. It's always been a disconnect. But then, unfortunately, it's gotten worse. So you really need to spend time with an expert, whether it's an expert that can represent you properly to obtain the valuation that you deserve for what you paid for. Right? You took a risk, you paid for that risk, and you deserve to get compensated for when that risk event arises. In my specific experience currently, especially with COVID happening, there was a break in supply. So commodities have fluctuated quite a bit, going down, looking for windows, glass windows, steel. It's prices are going up, and they're continuing to escalate. Labor may be somewhat stable because of unemployment, but remember, most of the cost events of construction are dealing with the 45 to 50% of the dollar material costs. More importantly, and this is very interesting what happened during COVID, if the efficiency of restoration work, let's say, I went into a condominium, for example, where you have 30 stores, and before I was only able to work from 9 a.m. to 5 p.m. because I didn't want to disturb, or we weren't allowed to disturb the condo owners. That efficiency made the restoration would last 6 months. With COVID, it's going to last 10 to 12 months because now you've got to do the social distancing, the CDC requirements. Insurance companies just don't take that into consideration when they value their cost, because you don't have that efficiency. But the association will see that cost because it's going to be passed on by the contract. So you see the disconnect getting worse, where the insurance companies are not understanding that to do the work is not the same post-COVID as it was pre-COVID.
Right. Now, we dove, that would be the proper way of saying it. We dove into those issues on a prior broadcast and talked about, some of the costs that some of these associations particularly were not taking into account when they had like a normal water pipe break or something in the property, and how they just, the valuations assigned to these claims are just not even close to being correct because they're not including all the PPE gear, all the logistical issues of getting up a 30-plus story building to mitigate some of this issues. So all great information. Well, Hector, honestly, thank you so much for coming on. How can the audience find out more about DLT Global, all the great things that you guys are doing?
Well, the easiest way is we're always updating our website. That's www.dltglobal, pay attention, .co.
Yes.
And in that website, we keep up to date with testimonials of what we're doing across the world.
Yep.
Your projects internationally. We're building cities, we're building districts, we're helping on an international basis handle claims and also look for assets that are very interesting. For example, institutionally, a lot of moving out of China into South America. So we're big into South America, trying to create an alternative approach for institutional distribution to be housed out of major ports in Colombia and in Panama. So those are changes that are happening. Real estate trends are moving with it. So we're taking advantage of that as well in the international.
Well, Hector, honestly, It's fantastic. Thank you so much for coming on today. And most importantly, thank you for all of our attendees who tuned in today for our live broadcast of Recovery Report. We want to, again, provide you actionable information that you as a business owner or community association can use in order to make sure that you're getting from your investment what you're owed or entitled to, whether that be the real estate itself, the business, or the insurance product that you've been purchasing and buying. We want to make sure that you're leveraging those opportunities to ensure that they are doing what they're supposed to, and we want to give you new and different ideas, a way that you can strategize, and especially in this pandemic time and this tough economy, or maybe you're the silver lining. You're the business that has leveraged the opportunities because of the new digital platforms and the rollout of all these things, and figuring out ways to deal with those things and utilize those things to be able to reach a broader audience. We can go on, and that's what this is all about. We want to be able to provide you actionable information. So go online, check us out at getglobalpro.com, check out the resource section. In there, you'll see all kinds of downloadable information. Make sure you subscribe to our YouTube channel, because we want to continue to deliver to you this information every single week. But it's not only about our live segments, it's about all the other segments that we're going to continue to push out there, all the information that we want to deliver to you on a consistent basis, so that you have all the information at your fingertips that you can to better make decisions for your business or community association. Like us, follow us, all the social media platforms, we're out there. Call us, email us. Again, thank you to Hector, all of our attendees for tuning in this week on the Recovery Report Live.